Picture the money in your bank account right now. You probably imagine it sitting somewhere, a pile with your name on it, waiting in a vault for you to come get it. It isn't. Right now, most of your money is out in the world, lent to a stranger buying a house, funding a business, earning the bank money you'll never see. Your balance is just a promise on a screen. And understanding that gap is understanding how banking actually works. Here's the thing that surprises people. A bank is not a safe box you rent. It's a business, and its product is your money. When you deposit, you're not really storing money, you're lending it to the bank, whether you think of it that way or not. And the bank's entire job is to take that money, put it to work earning more than it pays you, and keep the difference. Everything else, the app, the cards, the branches, is built around that one engine. Let me show you how it actually runs. The core engine is beautifully simple. It's called the spread. The bank pays you almost nothing to hold your deposit, maybe 1% or 2%, often less. Then it lends that same money out to someone else, a mortgage, a car loan, a business loan, at a much higher rate. Say it pays you 2% and lends at 8%. That 6% gap on money that was yours is the bank's profit. I work with billing and payment systems, so this pattern is familiar. The real money is almost never in the thing you see. It's in the gap between two numbers. You see your interest, the tiny number. You never see the bigger number the bank earns lending your money onward. The whole business lives in that difference. Now, here's where it gets genuinely strange. Banks don't just lend out your money once. Through the system, the money multiplies. Here's the simplified version. You deposit 100. The bank is only required to keep a small fraction on hand, because not everyone withdraws at once. So it lends most of your 100 to someone else. That person spends it, and it lands in another bank as a new deposit, which lends most of it out again. The same original money gets lent and re-lent, rippling through the system. The result? The total amount of money in bank accounts is far larger than the actual cash that ever existed. Most money today isn't printed notes. It's numbers on screens, created as banks lend. That's not a glitch, it's how the modern money supply is built. Your deposit isn't just sitting there, it's the seed of a whole chain of lending. The spread is the main engine, but there's a second one running quietly alongside it. Fees. A free checking account is rarely free. Overdraft fees, card fees, transfer fees, minimum balance penalties, the cut taken every time you pay a merchant. Individually small, invisibly automatic, and across millions of customers, enormous. Same logic as every free thing we've covered on this channel. If you're not paying an obvious price, the price is somewhere you're not looking. With banks, it's split in two. The invisible spread on your deposit and the steady drip of small fees on your activity. You feel neither directly. That's the design. So if your money is really out there, lent and re-lent, what happens when you want it back? You just withdraw it, and it's there. Because at any moment, only a small fraction of people want their money at once, so the bank only needs a small fraction on hand. The system runs entirely on a quiet, shared confidence that your money is there, even though, mostly, it isn't. It's a promise the bank can keep, as long as we don't all ask at the same time. And that's the one crack. On the rare occasions when everyone tries to withdraw at once, a bank run, the illusion breaks, because the cash was never all there to begin with. That's exactly why deposit protection schemes exist in most countries. A guarantee to keep the confidence intact so the machine keeps running. The whole system is built on trust, backstopped by a promise, so that the trust rarely gets tested. So how does a bank make money with your money? It pays you a little to hold it, lends it out for a lot, and keeps the spread. It lets the system multiply that money through re-lending. It drips small fees on top, and it all rests on the quiet confidence that your balance is there, a promise that works precisely because we rarely all test it at once. Your bank balance was never a pile of cash with your name on it. It's a number, a promise, and a business. running on money you thought was just sitting still. None of this means banks are a scam. The system, backstopped properly, is what lets people buy homes and start businesses. But knowing your money is a product, not a stored pile, changes how you think about where you keep it and what it's earning you. Next time, we follow that thread into something you touch every day: why free shipping isn't free, and the clever way the cost gets hidden in plain sight. Subscribe, and I'll see you there.